We only have about a month left in prime summer grilling season, and according to Traeger Grills, it's been a pretty good one so far. Shares of the grill maker rising today. They reported earnings that were better than expected in its second quarter, and shares are jumping, as Destiny's Child would say, by about 22%. Joining me now, we've got Traeger Grills CEO, Jeremy Andrus. Jeremy, always a pleasure to grab some time with you here. I mean, we got to do this over a grill at some point, but we'll schedule that for our next conversation, perhaps. Walk us into the quarter, what you're seeing right now in this customer environment where maybe a few years after everybody was kind of refurbishing what the backyard looked like in that entire experience, maybe it's time to replenish the grill. I don't know.
Well, look, I got to start by saying I could not be more proud of my team for delivering a fantastic quarter in what is a challenging environment. The post-pandemic environment for grill sales, like other consumer discretionary categories, has been challenging. On effectively flat sales, we grew EBITDA by 25%. We did it by controlling spend. We did it by growing gross margins by 600 basis points. And so I'll just say real credit to the team. This is a hard environment, and our team was disciplined. The team acted like true operators, and I think it speaks well to our future that if we can grow EBITDA by 25% in this environment, as we return to a more favorable consumer environment, there's going to be a lot of upside in this business.
You know, it's really interesting. Our fountain of energy executive editor, Brian Sazi, was sending me an email at 3 a.m. this morning talking about one of the analyst approaches, and I was not immediately available for comment, but when I did get to this email, the analysts over at Jefferies were talking about Traeger Grills, saying while grills appear to be nearing a bottom with an improved outlook, consumables and accessories underperformed, accessories expected to remain challenged. The recovery has progressed, though likely to be gradual. Take us into your thinking, even as some of the analysts on the street are trying to wrap their minds around this broader recovery and growth prospect for the business.
Yeah, well, so Traeger is a disruptor. We have been winning the last 10 years and taking share because we have a better product experience. We invest deeply in building a better physical product, a better digital product. These are the things that allow a consumer to fall in love with cooking, to fall in love with Traeger. And I think it's important to note that during this environment, as things have been tough, we've actually doubled down on the two things that are sacred to Traeger owners, to the Traeger community. The first is product. We have literally doubled our product team since the end of the pandemic as things have been challenged. So we are creating this pipeline of growth that we feel really good about. The second is our community and how we engage our community and create energy and bring content. And I think Traeger is small but mighty, but pound per pound we stack up to the best brands in the world from the community perspective. And so I think it's your comments or the analyst note. It's a tough environment. Look, we acknowledge that. We look at other great consumer discretionary businesses that are challenged, and I think we continue to invest where we need to invest to win long term, and then we behave the best way that great brands do in challenging environments. And look, we're winning in a tough moment. And I'm excited to unlock some of the things that we're investing in for the future.
Traeger is at the core kind of thought process for a lot of households, and that is trying to figure out, okay, eating away from home versus eating at home. And that squarely has a lot to do with your business and the availability and the opportunity to eat at home because you're cooking more at home. But as consumers, as households are looking at the environment on an economic and personal level and trying to figure out how much they can be eating out versus eating at home, how does that start to play into the results, but also into the outlook for Traeger Grills?
There's no question that as the pocketbook gets tight, consumers eat out less. A Traeger owner cooks at home on their Traeger so much more than than owners of gas grills and charcoal grills do. In fact, the average Traeger consumer, Traeger owner, cooks about 50 times a year on their Traeger. So this is a product that not only elicits a lot of passion because of the cooking and the food experience that it creates, but it gets used a lot more. One of the things that I think we saw in the second quarter that was pretty remarkable is that grills returned to growth. You know, grills, the grill industry has been down significantly in 22 and in 23, and in the first half of 24. We took share. We returned to growth in grills. And I think to some extent that speaks to the power of the brand. But I also think it speaks to this notion that consumers use their Traegers more. It is a more important part of their home cooking experience. And as they eat out less, they can justify making an investment like this that pretty quickly saves them money.
Yeah, no, it's a great point. Food away from home price growth outpaced food at home and overall inflation over the past decade, and certainly the grill is going to be a core part of a lot of households battling inflation where they can by cooking at home. Traeger Grills CEO Jeremy Andrus joining us here. Jeremy, great to see you.
Good to be here. Thank you.
Thank you.